You said that trade put you on the map. Like, what did that take you from?
It took us from, being a $20 to $30 million fund to being like 300. And that was when Ether was still, below $400.
3AC was a crypto hedge fund.
One of the biggest, most respected funds in crypto.
When ETH broke 1,000 already, broke $1 billion for sure.
And they were known as these brilliant traders who could do no wrong.
By May, it had gone to, I think ETH went to 4,200.
Jesus.
And I think we were near $4 billion by then.
These guys were kind of gods in the crypto space.
And then in a span of 5 weeks, it's basically all over.
Breaking news right here that 3 Arrows just filed for bankruptcy.
It was borrowing billions from crypto lenders and as a result played a central role in this summer's price meltdown.
I know there's been more focus lately on the collapse and what happened after. We can get into that. But when Bitcoin's pumping to all-time highs, when we're at the situation we're in right now, people have these numbers in their head, right? This is the cycle I'm going to make 7 figs. This is a cycle I'm going to make 10 million. A lot of people right now are about to go through that on their own. What does that look like? How does that happen? You're one of the few people in the world that's hit like those dream numbers. I'm fascinated to hear the beginning. Like, I think we all expected, myself included, a slower, more steady run higher. That's not what's happening at all. I mean, we're going straight up. What do you make of how fast we're going up?
I think it shows how much supply was taken off the market the last couple of years, and then suddenly the market's pricing it in. I think that in a way, if you look back to 2022 and the price action then, if you could say, let's say those things didn't happen, and then the market proceeded, maybe this is just the fair value, I think. So I feel like that's part of it. Another is like we're so close to having at the same time that you get ETFs. We never had that kind of flow before where you have this big buy flow. I think there's about 700,000 Bitcoin in the ETFs already, which is quite huge. So yeah, I think it's a mix of those things for sure.
This is the fastest we've gotten back to all-time highs for Bitcoin ever. Is an ETF coming in, does that create the scenario of the Supercycle that you laid out a year or two ago, where we have this thing where cycles speed up to the point where, we used to go through a bear market and it's like 2 years of agony, but the faster they go, especially if they continue at this rate, you can imagine a world where in a couple of years, it's like, it just looks like a higher high and a higher low, and it all kind of becomes one uptrend. It's like when you zoom out on the Bitcoin chart and look at the yearly chart, it looks like we're always in a bull market. So as you speed up the timeline, it's kind of what it would feel like too.
I think so for sure. I mean, if you look at ETF flows in most products when they first launched, like gold, for instance, at that time, they were very one way for several years. And so, here, I think if we see similar, then that can temper a lot of the cyclical aspects that are more native to crypto. Let's say, taxes at the end of the year, which used to be a huge concern, will become less so if, you have a lot of institutional inflow and just, passive inflow. I feel that, also, I think a big thing too is that, like, even though there's still a lot of leverage in the system through derivatives, I think that there's less of a kind of bounty for hunting stops and for that kind of stuff. So I feel like the market's now more controlled by, let's say, non-crypto native flows.
Right.
This is probably the first cycle where that's definitely true for Bitcoin and Ether. I think Ether to a lesser extent. I think Ether is still more controlled by crypto natives, but I think Bitcoin is definitely less controlled by natives now than ever, which is also partly why the downtrends have been very, very few.
And meaning that Bitcoin probably just behaves much closer to, it's more ingrained with the macro traditional asset cycles in a way.
To an extent, but I also think it's like a general reweighting of people's portfolios. I think now Bitcoin's kind of an asset where people, it's not about getting off zero anymore for people. It's more about like what percentage do they want, like maybe 5, 10, 20, even 30. And so that kind of recalculation is what seems to be happening now for sure.
You tweeted out recently, I love this take. You said, don't obsess over the bags you fumbled in the past. Know that the ones you may be fumbling in the present are just as big, if not bigger. I felt that so incredibly deep. It's so true. And I think anyone that's been here more than a couple of years knows how true that is. But the concept hits so much harder coming from you, like because of where you got to making $1 billion last cycle, like when Bitcoin's pumping to all-time highs, when we're at the situation we're in right now, people have these numbers in their head, right? This is a cycle I'm going to make 7 figs. This is a cycle I'm going to make 10 million. Like if I play the cards right, these numbers can happen. You're one of the few people in the world that's hit like those dream numbers. And I know there's been more focus lately on the collapse and what happened after. We can get into that. But with the cycle kicking off and things getting this weird, what I would love to do, if you're open to it, like I'm fascinated to hear the beginning. Like since a lot of people right now are about to go through that on their own and have these fantasy numbers in their head, like what does that look like? How does that happen? There's a handful of people in the world that can be like, I lived through it. And so if you don't mind, like, can we do that? Making the first million to 10 million to 100 million. We don't have to go through, every trade or whatever, but like, I would love to go back. How many years ago was it that you started 3AC and you hit that first big number? Like, can we go back to that time?
Yeah, definitely. So I had a couple years experience in investment banks, and then a couple years in a trading firm, a Dutch trading firm called Flow Traders, doing ETF arb. And then we started Three Arrows late 2012, but that was at the time just to trade foreign exchange because we had some strategies there that we wanted to do. We started with a very low amount of capital, about $1 million. So it was also around that time that I discovered Bitcoin because it became, so we were in Hong Kong then, and then Bitcoin has already started to get talked about as a way to send money across borders and also just kind of like a cool toy. I think the first Bitcoin like I bought was probably around $5, just playing around with it. And then later on, during the early 2013 run up, there started to be arbitrage across exchanges. So I played that a bit, but I never really thought of it as an investment at that time because I just thought like, I wasn't really in an investment mindset at all. Like I'd only bought a couple stocks in college and, wasn't that interested in investing per se. Trading I liked more and just kind of, finding exploits in the market, but, less so about like taking my money and putting it into something. Like that wasn't a mentality I had. So, like when I got my bonus, when I was in Singapore at a trading firm, I'd like spent it, like I bought a car with the money and I like, didn't buy any stocks, just like had cash in the bank and I bought a car. Like that was it.
What kind of car? Was it a nice car?
Zero investments made.
Did you ball out?
It was like didn't really ball out. It was like a used car. Just like, yeah, I'll get a car.
Right, right.
But it, like zero investing really happened. And so 2012, 2013. So I later on realized I fumbled the bag there because I could have actually, I could have easily bought at $5. I could have done the Roger Ver trade, right? Like Roger Ver at $5 or so. Also, he just decided to go in, so he bought about 300,000 Bitcoin for about $1.5 million, right? And that was kind of his entry into it. Now obviously, I would have had to have the conviction to do that, and I couldn't have bought $1.5 million of it,
right?
But I could have bought $500,000. Like I was early enough to buy half. I could have bought over 100,000 Bitcoin. I was early enough to buy 100,000 Bitcoin at that time. Like, so I guess when it went to like 300 already, 400 already, I'm like, it's like not really an investment. It's a kind of a tulip scheme, but I'll arbitrage it. I'll play it. So later on, I had money stuck on a exchange. Actually, the website went down. It was like a perp trading exchange at that time. Not really perps, actually, more like futures exchange. And then I'm like, I'm done with the space. Like, I don't really want to watch this anymore because it's more of like a hobby as well at the time. So I didn't really look at it too closely after that. So the first trader that I hired, he left and later went to Coinbase. And then he told me to buy the ETH ICO. And I was like, this is crazy. Obviously, like, this is a scam, right?
Right.
I then I bought some Bitcoin by then as like a longer term hold, relatively small percentage of my portfolio. But and then as luck would have it, like the next year, I had a different trader at my firm. He blew up an equities book trading at Three Arrows. And then he's like, you know what? I don't care anyways. I'm already up so much money on my ICOs and on Ethereum. I'm like, well, that's not cool. But, and then I was like, okay, well, then I have to study this thing more because, this kid just like blew up his job and doesn't care. And he's like, so that's kind of how I got from foreign exchange all back into crypto. There's a long journey for me. So like, actually, if you think about, from my point of view, like the fumbles, like my first fumble is Bitcoin, my second fumble is Ether. So then when we went to, going into 2018, we had done well in FX. We had made, tens of millions of dollars in FX over the years, and we thought it was good. And then we realized, like, wait, people are making huge amounts in crypto, for one, and for two, it's like it's a movement that's happening that seems like it has a lot of momentum, and it's at the intersection of a lot of broader trends about digital age, about sovereignty, and so kind of from that point of view, 2018 was actually really interesting because so we had made an investment in a firm in Hong Kong, and it was these two guys who were doing crypto trading, and they decided to go full time. And so we made an investment in that, about 50-50. And then later on, they decided, it was such a deep bear market, they decided to go and go back and get a day job, actually, because they needed the salary. Like, that's how bad the bear market was in 2018.
I remember it, yeah.
Yeah, and so late 2018, and then so we're like, sure, you can do that, that's fine. And then, but we'll keep doing the crypto stuff. Why don't we keep it running? And then so we put that into Three Arrows, which was still mainly an FX fund in 2018. And we put that in. We ran those strategies. I think because it was so early at the time, not many people were trading perps, at least properly. A lot of stuff you could do then didn't, you probably can't do now. So we did really well. And then I think 2019, there were a number of trades we did well on. And really the biggest one was ETHE. I would say ETHE, Ethereum Grayscale Trust, that was really what put us on the map, because it was around a time when GBTC, Grayscale, people were doing that. That was a well-known trade. But generally speaking, people thought that trade would end at some point. And there was the sense that it would go into discount and people wouldn't buy it. Eventually, there was no borrowing market yet at that time. So there's no idea that you could like put it in and then borrow against it and then put it in again. So we actually came up with two things that were really big that year. I think one was that Grayscale had just launched their Ethereum trust. And at the time, we were much more bullish on Ether than Bitcoin. I remember we did a podcast in Singapore around then too, and we talked about how DEXs could become a thing. There was a project, like maybe DeFi is coming up. So we wanted to have, generally speaking, Ether exposure over Bitcoin exposure at that time. And then we said, why don't we find a trade where we can lock up some ETH and get some juice on it. And at the time, there was really the option that the natives chose was Edgeware lock drop, and about 1.3 million Ether went into that, which is a huge amount. Obviously, there's still more ETH in Edgeware than is in Eigenlayer today. But then Grayscale, one of our guys thought, well, why don't we put it into Grayscale? Because worst case, maybe trades at 0 premium, maybe a slight discount, but best case, maybe it goes for huge premium if it's a bull market. So we put a large amount of ETH into that trust, I think 100,000 Ether. And some of that was basically like, that's a 1-year lock, right? So you have to kind of hope that it goes well. And that's capital you then can't use for quite some time, right? So it's quite a commitment to it. But that became a 300% premium because of just the massive interest in Ethereum at the time and the lack of ways to buy it. So we were essentially able to sell Ether at like 1,300 implied, while spot was still 300 or 400.
At the end of the year, you were able to sell at 1,300.
At the end of the year, yeah.
Right.
No, but when spot was still only about 300.
Sure. Yeah. What like notional value? How much did that boost? You said that trade put you on the map. Like, what did that take you from?
It put us on the. It took us from being a $20 to $30 million fund to being like 300, and that was when Ether was still, below $400. Because there was a big sell wall at 400 around that time. There was a lot of funds selling at that time, and so we were really fortunate to have that kind of a big boost, because it's really nice to have like a large capital base going into like DeFi summer. I would say that was kind of our next big thing, which is like DeFi summer. Actually, I guess rewinding back a bit, another thesis we had during bear market, like late 2018, early 19, was that you wanted to buy SAFs of stuff that was blowing up, or that of funds that were blowing up. And so the main thing there ended up being Polkadot. We thought was a very good proposition, because even though the parity hack had happened and they lost a bunch of Ether, and also there was a general malaise around smart contracts. We felt like, this is a very, very strong team, very, very good story, and also very compelling tech. So, we were buying a lot of Polkadot in the OTC market. We bought Solana in the OTC market, Definity, Filecoin, a couple others. But we just thought, this is bombed out. How much lower can it go? You just buy it, and then the bull market, it's good risk reward. So we had that portfolio as well. So we kind of went into 2020 with that kind of a portfolio, while still doing a lot of our perps trading and stuff. And it was also that year we bought Deribit. We bought a stake in Deribit because I was writing for them, and then I just thought, options will be big at some point in crypto, and they seem to have a very good sense of how to do options. Like, they're very professional at it. Whereas most of the crypto exchanges, they were more retail facing. I felt like, their matching engines would freeze up, or their basic, they just couldn't do the basics, right? Like, okay,
overload
problem.
Overload
is one. Yeah, overload is one thing, but also, like clawbacks on futures where, the future would gap down and then they wouldn't be able to pay out. I felt like they were the adults in the room, and they would be able to gain market share. So we made investment in Deribit as well in 2020. That also did very well.
I'm curious, before we get into DeFi summer, so you build up this stack. The ETH trade is what puts you on the map, gives you this capital base going into what's about to be one of the most explosive kind of altcoin seasons we've ever had. But I'm curious, when you were investing, then you get this pool of capital, you're still going into ETH, you go into Polkadot, Filecoin, Solana, these other layer ones. Do you remember like what the narrative was for ETH? Like, NFTs that definitely wasn't a thing. I'm sure there were some NFTs out.
Definitely not a narrative.
DeFi wasn't a thing yet. It was being talked about, but it wasn't a thing. And really, we were still, like, if I remember that time period correctly, we were still kind of in the hangover of ICOs aren't coming back because the SEC shut it down. And all the ICOs have now sold this ETH. That's why the market tanked. But it's like, what is this stuff going to be used for? Like, what were you guys excited for? Were you just saying something else has to be built here?
You're right. The sentiment in space was very Bitcoin maximalist at the time.
Right.
And in fact, it's almost like if you weren't a Bitcoin maximalist, people wouldn't take you that seriously.
100%.
So you'd have to almost you'd have to preface every conversation and be like, well, first of all, I'm a Bitcoin maximalist. But second of all, I think smart contracts could still do well. So it's just the way the space was, because I think Bitcoin showed its resilience by not going down as much.
Yep.
And also there was also the BTC versus BCH fork stuff that was a big contention in early 2018, that by late 2018 people said, okay, the small blockers won because their price went down less, right? So that was another big thing. So I think that I felt that the big blockers were almost certainly right, that you have to use blockchains. You can't just hold them necessarily. I mean, people can just hold them, but the most interesting part about crypto is what you can do with the idea of peer-to-peer money and peer-to-peer exchange of value. So I think people kind of lost sight of that because of how much prices went down. That's how, prices drive narrative, right? Like, price comes before narrative. So when ETH was like at 0.13 versus Bitcoin, then it's like, okay, smart contracts are the only thing that matter, and there's no Lindy effects, there's nothing like that. And then when it's like at 0.015, whatever, then it's like, ETH is worthless. It's, Vitalik's quantum computing scam. It's like, like all that stuff comes back. So I think that just shows the extreme nature of crypto, right? We saw it this cycle now with Solana, where, at the top, it's like the next ETH, at the bottom, it's like SBF scam. Obviously.
And it's so funny that you said you had to preface conversations by saying, I'm a Bitcoin maximalist, and then kind of explaining your viewpoints. That just made me think. I went on CNN, I think it must have been mid 2019, and I've just watched, it's like a 5-minute clip. And I think like multiple times she would ask me my opinion on stuff, and I would say, well, I'm bullish on Bitcoin, and there could be some exciting things happening on ETH. I say it like out of context, like totally unprovoked, multiple times throughout the show. It just made me think about that. That was a normal. You had to say that, or else you look crazy. But you also risked, if you were bullish, it was like the shit could fall another 40%. Like it was ridiculous to even be one of like half and half alts in Bitcoin. God, a different time. We're like polar opposite of that right now, it feels like.
Definitely. I think the last run, 2021, was very much Ether was a very popular institutional narrative. I think now it's somewhere in the middle now. I think now Bitcoin and Ether, they kind of have I think it's more balanced now. I think it's the market's kind of gotten more efficient on that.
All right. So you're going in, you have this stack, you've made some bets there, you know that something needs to be built. That sets you up for DeFi summer at a couple $100 million now.
Yeah. So DeFi summer was really good for us because DeFi, the first wave, the TVL that you put in, you get coins from that, right? And it was kind of the beginning of liquidity mining and pool 2 kind of dynamics. So we farmed Compound really well. It was like 200% APY. We actually, sold a lot of ETH to have dollars to farm Compound, but then we could buy ETH perps, ETH futures, ETH call options. So we managed to keep the exposure and added to it while farming a lot. Sushi, we actually missed farming because we thought it was too dangerous to farm. But later we just bought on the market when it dipped enough. And Aave was a big bet for us as well in the beginning because we just felt like, Compound, Aave, this kind of stuff will be really used. And that was, 50x's within a few months. So I think DeFi summer captured imagination at that time too, because there was this meme that the TVL should equal the market cap.
Yep.
So if it was like 100 million TVL, then the coin must go up to that price. And that was something where it was made true by the price leading narrative, because prices were going up. People were arbitraging the difference they thought. So it's like if it's a 500 million TVL and then 100 million more comes in, then the coin should go up by 20%. That was the logic of the market at the time. At some point, that failed to be true.
What's funny about that period, at least from what I remember, when people were applying those TVL valuations, and that it started as a meme, then it kind of became reality, as you said, price creates the narrative. It felt like we started to. It felt, I guess, at first, it was almost an honest attempt to like put valuations, attach these to things almost like the traditional world would, and say, this has value because of cash flows. This has value because the amount locked. And what that led to, like less than 6 months later, was prices being even more blown out than they would have if we would have created these TVL and like traditional metrics. Like things just got ridiculous.
Absolutely. Because it had the idea of a valuation framework, then it's like, okay, well, this is better than a meme coin because it has cash flow backing it. The problem is, if you have liquidity mining, then actually it becomes a game of saying, okay, I'm performing actions I normally wouldn't perform in the hopes of earning this token. So in the beginning days, the token was unlocked, so you could actually farm and sell this token like day to day, right?
Right.
Over time, they started to lock them, and then because they didn't want the dumping to happen immediately, they wanted you to keep keeping the TVL in. And then this cycle, they just give you points, right? So that, it's more confusing and you can't dump it. But it's something that looking back, like essentially, if activity gets incentivized that wouldn't normally happen, the key question is, after the incentives stop, will they keep doing it, or will they immediately go somewhere else where there are new incentives? And for a lot of DeFi summer, it turned out they'll go somewhere else immediately because they're trying to farm the money and leave, right? So I think the most bizarre project is probably like Big Data Protocol. I don't know if you remember that one, but basically it's like a farming project. Everyone comes and farms it. It gets listed, and I mean that's the other thing too. Like a lot of the big CeFi exchanges were very scared of DeFi at that time because they're like, whoa, people are actually trading on chain. This is an exchange's worst nightmare because they can imagine a world suddenly where no one needs to use CeFi exchanges. They just all trade on chain, right? So there was this mad rush to list anything that had volume on chain. But what that meant was that anything getting volume on chain or any traction on chain would get its own listing. So that became a very circular thing where if you have a DeFi project, it has TVL and it has some volume on chain, then it's going to get listed. Whereas in the past, projects had to do a lot of work, write white papers, build community, and then pay money to get listed. Here, exchanges were rushing to list DeFi coins so that they could win the customers from on-chain.
So we went from ICOs 2 cycles ago to liquidity mining and farming, and now we have basically the same level of farming. It's just you're locked for longer. We call it points. In my view, we're just playing this merry-go-round, or like this cat and mouse game with the SEC of this is just the new way to kind of launch tokens and do ICOs. Is it a better way to do things? Like, is it better each cycle, or is it worse?
I think it's better, but it's different. It's also different. And it's like better for who, right? So I think ICOs were really good for project founders because you got the ETH and you keep the coins and you just sell the ETH and you sell the coins, right? But then at the same time, it was also very good for like the ICO investor,
right?
Because you could just like buy it there and then you'd be up like 10x, on EX, because not many people knew how to buy an ICO. They only knew how to buy on exchange. So you could like snipe the on-chain, or you could do it. So I think that the main alpha from the 2017 was that like just know how to buy the coin like at the lowest price you can get. And that was a huge time for syndicates too, because syndicates would come in and they would like then try to buy again and then resell it higher, because the end buyer, he's buying it not even caring that he's buying it at 10x what someone just paid a month ago. He's just like, oh,
new token.
So
new
token. Yeah. So there was less of a understanding that you had to understand the tokenomics back then, I feel. And then after 2018, the hangover, now like, okay, who's selling? What are the vesting schedules? Like, let's study everything. That's actually why like everyone fumbled Solana in 2020, because they were just studying the vesting schedule so heavily. They're like, wow, this is such a huge unlock. So Sam, and the consortium was just like, why don't we just buy out everyone pre-unlock? Let's just buy everyone OTC. And then, that dynamic happened with Polkadot as well. And so I think that after studying tokenomics very hard, they then, misinterpret it. But I think that if you look at, going from ICO to DeFi farming to points, what's interesting about points is that it's, again, very founder friendly, I think, because whereas liquidity mining arguably is not that founder friendly, I feel it's it's very trader whale friendly. It's very like, the guy who puts in the TVL gets a huge amount of the money up front, right? I think this cycle, the teams are in a very strong spot because essentially you have so many ways to fundraise now. You can do a private round, you can do on-chain raising, but you can also do a point system where points essentially are getting people to, because it's not unlocked tokens that can be dumped, points essentially is like a stealth ICO, right? Where you're raising from your users money because they're doing actions they wouldn't normally have done.
Sure.
Right? I'll give the example of like a restaurant. It's like if they start selling $1,000 burgers, right? You normally wouldn't buy $1,000 burger, but if I give you points each time you bought one, you might buy one because you might say, well, these points, I'm going to sell them. I'm going to get something value at some point.
I can own a franchise one day if I acquire points.
Yeah, you're going to own a piece of the restaurant, right? And what's especially funny is then if I use the money you paid me for the burgers to buy the points up of what I'm giving you,
sure,
maybe to bid them in an ODC market or to give the idea that these points are worth a lot, then you're going to say, okay, then I'm very happy to keep doing this. And so exchanges can raise a lot of money, products can raise a lot of money through these kind of point systems because they don't have to give the cash up front. They don't have to give tokens up front. They can wait till much later. So points as a fundraising mechanism is super interesting. In a bull market, it works because there's still an end buyer for the thing. The guy, he didn't farm it. Like he didn't know you could eat burgers and then get ownership of the restaurant. He comes in and actually buys the shares.
Yeah.
That guy is actually similar to the guy who doesn't know that you can just buy ICOs normally. He buys them instead on exchange at 5x the price.
Right.
So it's an asymmetry there that very much it's good for the project. It can favor the natives who are doing it if there's an end buyer for the product.
Yep. For
the tokens of that are generated from points. If there's not, then there's going to be a hangover similar to the ICO hangover. But there might be for the top projects. For the non-top projects, it remains to be seen. So
I guess when you compare it like that, yeah, because points have been getting a lot of hate. I mean, it does as just an average investor. I think ICOs were probably the best. Just the time to liquidity was amazing. I think you had insane edge. You could almost compete with funds because you could syndicate up. DeFi farming was pretty horrible if you didn't have a giant stack. Points farming is better than DeFi farming for the average person out there. For like the average listener, $10,000, $100,000, you have a chance to to farm and have a giant payday. So I think I guess we're trending back in the right direction. It's just funny how we're just playing this game. It's like Gary Gensler tried to stomp out ICOs and we just create new mechanisms to the same thing. All right. So you start running it up. That's DeFi summer. And then that gets us to what, layer 1 trade is probably happening by now?
Yeah, layer 1 trade is good. I think we went too far. I think then that's part of the problem with trading and investing in that kind of mix, because I think that layer 1s, originally we had just, Solana thesis, Avalanche thesis. And I think then by early 2022, we did the big near rounds. We did a round on Mina, which we had invested in earlier as well. We did that Luna LFG round, which obviously was not great. Yeah, I think it was also around the time of like ETH having really high fees, and we actually, I think we missed a bunch of like L1 chances. Like I had a chance to buy Matic at 2 cents for huge size that I skipped. I had a chance to buy Phantom at like 1 or 2 cents, which I passed. So I think that definitely, even though I saw the L1 trade coming, I felt like, these kind of names weren't gonna be the right plays. But
Sure.
Interestingly, like they just popped so fast, right? And they did so well with like their own guerrilla strategies. Yeah. Then I think AVAX did the run from, let's say, 10 to 130 pretty fast as well during that time.
Matic was a 3. Now that you bring up Matic 300x'd, I think. If it was at 2 cents, was it?
Matic was
2 cents back then? Yeah, it's 250x, 300x.
Yeah, Elron. I think Elron was a few hundred x. All the Binance Launchpad stuff was really hot. Like if you look at 2019 Binance Launchpad, like so much good stuff there. Axie was a big trade. That was like a 2000x. And at the time we invested in Axie, we thought we were just gifting money because we didn't really understand game. I mean, there was no such thing as GameFi. It's just like, okay, here's a team, you give them some money. It was like $100,000 ticket. Really just a gift. Like we didn't really think it would go anywhere. And in terms of like as a sector. But I think that shows the value of just holding as well. I think it's like a lot of people sold their Axie on the first unlocks and they hedged with perps and they actually got blown out because, if you hedge your Axie with perps at $2, you're going to have to margin it as it goes to 200, but you obviously can't. So you're going to end up having to sell your SAFs at a big discount to then margin your perps. So
I bet people got carried out of that too, because Axie, specifically Axie, was one of the when Axie was pumping, like when it really started moving, it was the only coin moving. Like there was a 2 or 3 month period.
Funding.
Yeah,
super negative funding. I think that was the period, and I think FTX created this culture of it because FTX was so good at listing new perps and so good at just like, especially with the VCs, because a lot of the VCs were close with FTX, so they're like, of course you hedge your SAFT exposure with perps. That's just what you do. That's risk management. But then you can't use your SAFT as collateral. So, then obviously the funding can go to negative infinity on you while you've hedged. Because if you hedge half the OI, right, there's not going to be enough spot for people to sell spot by perp to put that in line. And if just a few big SAFT buyers hedge, their squeeze can be a pump in itself, right? So there's like a sector. There's a whole time period of like squeezing tokens that people had over hedged and not able to collateralize. In Solana, that happened also to a lesser extent. People hedged their SAFs going to the unlock. The perp funding was very negative, and then it squeezed 4x from $1.50 to like $6. And like I bet some VCs actually got liquidated on that move because you put some cash in your FTX account, that's just gone, and then you can sell your token. Okay, you've hedged a bit, but maybe you didn't need to all along. So it's something where just being able to like sit there and calmly and just hold the token was big alpha, I think, in 2020, 2021.
And that's probably, I mean, I imagine that's around then when the L1 started pumping, you guys probably breached $1 billion.
Yeah, I think we breached it sometime, I think when ETH broke 1,000 already. Yeah, I think we broke $1 billion for sure. I think that probably January 2021, Jan-Feb or so, yeah. And then I think by Feb-May, it had gone to, I think ETH went to 4,200.
Jesus.
And I think we were near $4 billion by then.
In a 2-year period, going into DeFi summer, you guys built up. I would say that's probably one of your biggest advantages and how you're able to outperform other funds. You have this big stack going into an explosive trend, which was DeFi summer with a couple $100 million.
Yeah.
Within 2 years, that's now $4 billion, and you're one of the largest fish in the pond now. Like you had to be, right? Were you the largest crypto fund?
Yeah.
Like, was there any other crypto, probably a couple of that size, or were you the largest?
I think it depends how you value stuff. I mean, I think that there's always, I think we're definitely the most active. I mean, Jump is very big too, and no one ever knows how much capital they really have. I think Jump is very big. Alameda is very big also. I mean,
how big were they though?
True. I would say these three. I would say, there's that funny meme, remember, of like, I think it's like Counter-Strike, but then it's like, there's like Kanav and then myself and Dogecoin, and we're going out to like shoot something, and obviously we all get shot instead. But it's just like that. Like at that time, it was very much like the trader VC vibe. It's like because a lot of the traditional VCs were quite jealous because of during DeFi summer, there were these firms that like, in traditional VC, you're not supposed to invest in every competitor, but you had stuff like, Alameda or ourselves, they would back like every single perp dex. And they'd be like, of course, that's just like promoting the industry. Whereas in traditional VC, that'd be absurd. You're like backing your competitors all versus each other. And there's like, but it's like, but if you give TVLs to all of them, then it's okay. So I think, because it used to be a thing where even for layer ones too, like you're supposed to choose like one of them. You're supposed to back one. And I think that ourselves in Alameda, we actually really pushed the Overton window out a ton on like what is acceptable to back. Like you just back like every team you think is good, basically. So very much like the Tiger Global model of venture. And it works in a bull market because there's so many things that are going on that there's pockets of innovation, and there's also a lot of capital flowing in to see what these teams can do later on. I think that, however, looking back, not a whole lot was accomplished actually on some of these L1s compared to what should have been, given the funding and given the interest. Like if I think back to EVM space, especially, like we really just got lots of forks of the same 5 things on every chain, right? I would say like the primitives were like the Aave primitive, you had the Uniswap primitive, and then you had like the Olympus primitive, maybe 2 others in there, but that's kind of it, right? Like and that was kind of enough to get, Phantom up to like $3. That was enough to get, different coins up to different prices. So
even AVAX, I remember that they launched that, what they call it, Snowstorm or some ecosystem fund. And I remember, God, however much I made on AVAX, it was a great trade, but I started just punting into like Trader Joe, and then you're farming Yak and all these snowball. And like, I got my brother into a couple of them, and I remember a month later, he's like, what the fuck am I doing? Like, what am I, this is a shittier Uniswap. It's churning out Yak snowball tokens. He's like, dude, like, I just want out. And it became a thing where like, that's the chain that I realized after that ecosystem fund pump was like, I'd rather just long the L1s and not have to deal with like because I think that became apparent to a lot of people was like, Avalanche is going to pump. It's probably even going to outperform a lot of the things they're quote unquote building. And this isn't hate towards Avalanche at all either. It just, as you said, it happened on every single chain. It was like, $200 million ecosystem fund. They spin up 5 or 6 projects that are there. It's just happening because it's farming. And then it's like, move on. Oh, there's a new ecosystem fund. It's like Phantom's pumping now. And that merry-go-round, it felt like got sped up so fast by the end of the L1 trade. It was crazy.
Yeah. And I remember the end of it was like phone. Remember phone, FOAN? That meme.
What was that? Phantom, One Harmony, Near.
Yeah, Phantom, Harmony, Atom, and Near. Yeah.
Oh God. So, oh man.
And that was being spammed in Q1 2022. I remember that very clearly. But yeah, and then we were thinking like, wait, do we need to buy Harmony also? And then I was thinking
God,
no, right? So I think, yeah, because you have to realize like the replication costs are so low actually.
Yep.
But L1 was such a popular trade too because you'd be in the money as soon as you bought it, and so because it's a discounted round, you feel like you made a lot of money just from buying it. The problem is that if the product doesn't deliver, it's not going to outperform the vesting. it can just have a dump. Like Near was priced at a discount to spot over several tranches, so different investors got different prices. But it went as high as $20. So even if you got a 60% discount, it doesn't really matter if the price drops like a huge amount, right?
Yeah,
so
yeah.
I think that kind of a thing where I think in the end the L1s actually farmed the funds in like early 2022 with all the locked rounds.
Yeah.
Which is good too, because then they have a treasury to kind of build with. But I do think that's that was kind of a dynamic that I remember it got to the point where I think we did discounted rounds we did one on Algorand too that we didn't end up announcing just because I thought we were doing too many of them. And then I think we even called up Oasis, which was a 2017 era project. Because we were like, hey, Oasis is all right, but that's an L1, right? Like, and I had a friend who wanted to say, why don't we lead a discount round on Oasis? So anyway, my point with all this is that something can start off good, but if you keep doing it, it becomes bad, right? It becomes dumb. So I think that's definitely true. And I also think that like that's the problem with like trader plus investor mentality, because if you're a trader, then a discount round on any coin seems like
good trade
plus EV.
Yeah,
a good trade. And then you find yourself like in it doing everything, because see, the problem with EV calc is that it's an arrogance to it. Like you think you know the expected value of things, but you don't really know, right? So, and that was something that like Trabuco and SBF used to tweet about all the time, which is like EV. We just calculated the EV and then we chose what we did. The problem is you can never really know probabilities of things, and you can never really know. So you're always estimating. But then if you come in with a very trader mentality, you're going to always think you can estimate the probabilities better than the market, or as, whereas like a more pure venture, I actually think there's a lot more humility in it, where you're like, I'm betting on the team, I'm betting on this. This could very much go wrong. Because for instance, venture firms don't usually farm their own projects. And I used to think that was because they were lazy or cowardly. And then I think that that's actually a good thing, because they actually want it to succeed on its own merits. So for instance, like I think Jump over supporting Luna in 2021, in a way, it's like if that was a normal VC, it wouldn't have done that, right? It would just say, let's let the market decide and let's let things decide.
Right.
But because it's like a trader plus venture, then it's like, okay, well, I have the trading strategy to work with the venture. And then you end up with that kind of a thing where it's like, a mechanism that wasn't as strong as it should have been was like kind of bailed out by trading firm. And that was very common if you think about as a mechanism. Like, so I think like, and I think SBF's whole like, sell me all the soul at $3 is very similar to that as well, which is like, it was definitely the age of like the alpha trader / venture, like, cult worship vibe, right? And I think that actually net produces worse projects, worse mechanisms, and just more fragility in the system. So
what would you say, you had two of them there, two lessons from that cycle, from the run up, before we kind of get into where things turned? One is just that if you do the same thing too many times, like if you keep rebaking or restaking or continuing to churn out these L1 trades, it's like the 10th iteration of that, especially if you're just repeating, obviously isn't going to work. But like, what's not like another key takeaway from that? Obviously we're in a different time. It's a new cycle. Things always play out different, but like, there's a couple things you guys did right, being flush before the DeFi run up. It's like, is there anything you can point to? I mean, it's you can do it in hindsight, so it's a little bit easier. But like, what's the biggest takeaway before things start going wrong there, where you're like, man, if that happened again this cycle, I should probably be a little bit wary?
You want to be wary when money's made very, very easily, and people are starting to invest big amounts on the expectation of future money being made as easily. Like, I think even though right now in meme coin season, money is being made easily, the difference there is that people haven't deployed that much money, right? The actual deployment isn't that high. So the profits are made off a lower deployment base. Where the dangers start coming in is when, a lot of money comes in, especially with the principal agent problem. So if you think about Grayscale GBTC, like, that's a great example of something which it had worked for quite some time, but that trade was very popularized in part by us, unfortunately. But basically, because we showed that trade so much, everyone piled into it, and then they all got trapped in it. And I think that's something too, where like, we should have seen the warning sign, which is that when too much capital comes into a trade to try to arb the funding or to arb the a relatively small window, like in crypto, you have to always watch out for when a ton of money is needing to cash out based on a number that a relatively small amount of money can control. Actually, Points is a great example of this. Because a huge amount of money can be farming something based on very low liquidity in the thing they're trying to farm, right? So it's different if the thing they're trying to farm, okay, they're going to be able to like buy more of it when it dips and like support it. But if they're really just trying to farm it, as in the case of a grayscale premium, then they have no choice when it goes into discount. They're just completely screwed, right? If it's something like Eigenlayer, it'll be better because, Eigenlayer Points at least gives you ownership of, let's say, a data availability network. So that has some intrinsic value that you'll then buy and sell and so on. So I think it's very important to notice when a ton of money relies on something being true, that doesn't take that much for it to not be true.
And also, yeah, more money and effort needed to basically start earning smaller returns. Like that happening just industry-wide. Where does this start going? What's like one trade, or I know it's a combination of factors, but like what was the point where this stops from going, 200 million to 4 billion? We're one of the top funds. And then like, what's the first dagger that starts to make you guys bleed?
I think it was all post Luna. I think like we were positioned too long for sure in Bitcoin and Ether going into the UST DPEG. And I think part of the reason too is because I thought the LFG mechanism would work. So they were buying, I think they bought 80,000 Bitcoin, right, over a period of about half a month to a month. And, we were buying as well. And we generally thought that that's a good mechanism. This is great. This will lead to like quite a solid move higher. But I think that because the market was, I think Do Kwon was not a good politician in the end. Like, I think that, he had pissed off a lot of communities. So there was a lot of people looking to hunt Luna and UST. There were kind of these brigades, right? And he was very arrogant as well, like by my hand, die shall die kind of stuff, right? Which is unnecessary, obviously. I think during March 2022, there was a lot of interest in investing in Luna from huge funds because it was just doing so well. And actually at that time, I think, so Binance had done seed in Luna and they had never sold any. Like at the time, Binance sells no seed ever. And they were going to do like another round, but they wanted BNB in the LFG because they thought that would give it a moneyness, right?
Sure.
And I actually told though, like, yeah, you should definitely let BNB be in the LFG. It's crypto, right? And he was afraid that it would be like not pure enough like for his audience because because Luna comes out of the Cosmos ecosystem, which is generally more purist than most, and so ended up not doing that. But you think about it, right? Like if he had allowed BNB and FTT to be in the LFG, he'd be fine today.
Do you think so? Because it would have been harder to take down all three of them, or what's the?
It would have been like at 18 billion market cap, UST not sustainable at 20% interest. But after the DPEG at 20 cents, if he had, let's say, brought in an ecosystem before then, it could have gotten restructured very easily, you see. Because let's say at 15 cents, right? It's actually only about $3 billion needed, let's say, to buy out the whole MCAP, right? So like in the traditional markets, when bank debt starts going down, the bank can essentially buy back its own debt with its capital and then it extinguishes it, right? So I think there was a hope in general. There was an understanding that, it could buy back its own DPEG and then repeg, right? But the problem is that the ecosystem support for Luna was not great because he had just made himself to be such a messiah of the space that, like I think most of Ethereum community generally wished for him to fail, right? And I think that to a lesser extent, I think a lot of players were quite neutral to kind of skeptical in the sense of, is this necessarily good for crypto or not? So I think that, the Bitcoin community likes it when LFG was announced. It's like, okay, we have another Michael Saylor kind of thing.
Yeah.
But I But I think that like net, I think that given his strategy was essentially to make, I think he was trying to make Luna a moral hazard, and then the space has to keep bailing it in. Because if he gets there, then he's essentially created, let's say,
a bank, a traditional bank, basically.
He's traded a bank. Yeah, he's traded a bank. Yes, exactly. So I think he's very close. If it had been done better in a certain ways, if he had brought in an ecosystem, it actually would have made it. Because think about Ethereum survived DAO hack, which is, in my opinion, still much worse than even the Luna DPEG. But so the other problem was that the UST, like the on-chain governance, it can't turn anything off. So he couldn't stop the minting, right? And that's what I think like Su Zhu was so mad about, is that you like, this is just constantly minting it down to zero, right? You're constantly minting, dumping. You can't stop it. So what could have happened at the time is if exchanges had all delisted Luna and UST, or just pause markets, then there's nowhere to sell, right? And then if you had a pausing and then a restructuring of UST to Luna, that could have also worked. Because the thing is, a lot of people don't remember this, but Luna existed for many years without a UST.
Mm-hmm.
Like that was like a newer innovation on top of it, right? Like about a year and a half old on top of it. And so there's also this sense for people that like Luna should have some value, irrespective of UST. Like it had its own meme value or its own like community value at some price, maybe not $100, but maybe like $20, right? And so that also didn't play out because it got minted to zero essentially, right? Like it got minted, and so I think it was a confluence of those things, but like we were quite surprised about how the whole thing played out. Afterward there was then a lot of contagion because GBTC discount blew out from like -20 to -50. Staked ETH even depegged for a while. So and those were some of our biggest positions.
Before those blew out though, how much did just Luna take you down? Like that wouldn't by itself have been catastrophic. It was really the daisy chain of what Luna caused.
It was more the daisy chain of the impacts on Bitcoin and Ether and other coins, and also the premiums on GBTC. Like we're still fine if GBTC is at Bitcoin value, right? Like, but the problem is that GBTC essentially got marked down almost 50% in that time.
And so you went from what, 4 billion to how fast and how far down?
Exact number is probably difficult to say, but I think it was, all in took about 5 weeks. And I think like the big market gap down, I think some of the big lenders, they, were also selling a lot, and it ended up being something where it's like a cascade effect, right? Yeah. And I think that, I think if we were smarter then, we would have done afterward like a proper restructuring. Like that's what a lot of people tell me now, like having seen the whole thing, which is to say, look, obviously it's a shitty situation, but your firm has a very strong brand, you have very good deal flow, you have all this stuff. Do a restructuring, bring like a firm in, like a Sequoia or like a top name, because at the time I think Paradigm and Sequoia they had calls with us and they said, let's take a look at the books, we can restructure this, bring in like a Lloyd Blankfein type, bring in like a banker who has experience with crises and whatever, and try to like restructure the debt. But I think just the speed of the dump was so fast, and the speed of the collapse was so fast, that I think Khan and I just didn't have the mental fortitude to go through that and to see that we could do a restructuring. Like I think actually if we had done that, it would have been not so bad. Like I think if you look at last cycle, like Amber made it out of it, like even though it was basically in the same situation, but they had just restructured privately with investors. I think that a few other firms made it out by restructuring. So I regret not being able to restructure. I think in a way too, I have this thesis that like actually social media makes it far harder for bigger firms to restructure than it should be.
How so?
If you think about like the pressure on investors as well as founders, there's not a lot of room for kind of getting quietly in a room and just like restructuring stuff. And I think that in a way that's what happened to FTX as well, because for FTX, in the FTX case, he could have definitely restructured if he had the focus, because FTX equity is worth $30 billion. If he just gives everyone equity, it's already fine.
It's because of pride or an ego thing, or like what's the why?
Yeah, I
Why?
think
Because it's on
so.
the public that it changes that. Like what about social media?
I think it's on both sides, right? I think one, on the founder side, like if someone is in the FTX case, if he's a showman, then he's kind of
You're giving up.
yeah, there's that. And then also I think on the investor side, there's kind of like, I'll give you an example, right? Like when FTX went down, the investors ran to like say we marked the investment at 0, right? And and this and that. While and part of the problem there was that Sam didn't sell them enough shares, and so they were not committed enough to care about it, right? If you're, you know, a big VC or whatever, but you only have like 0.5% equity, you're gonna rush to write it off and say, okay, I had no idea he was doing that. That's very bad, you know. But if he owned 20%, if they own 20%, they may have just said, shit happens. We'll restructure it. Equity gets converted into tokens. Holders get, there's a line of credit for withdrawals that comes through, and then they just wait 3 months. Solana's back to $80, and it would have been fine, right? So I think. And obviously, FTT is something which it's only worth 0 if the exchange is down. If it's not down, the FTT is worth at least $30. And so that's also something where basically it crystallizes the low. I mean, obviously, SBF did things that he shouldn't have done, right? He shouldn't have used the customer funds. But the putting that aside, like the fact that he couldn't restructure it, despite like that's the thing that the TradFi guys tell me the most about 2022, which is that they feel like 3.0 should have been an easy restructure. FTX should have been an easy restructure because of the fact that there's an ongoing like business, like an ongoing brand, and also that the negotiation with creditors can be kind of done in a calm way, private negotiation. Like you think about this, right? Like during COVID, many restaurants, many hotels went out of business, but you actually won't even know it because the ownership just changes hands. The debtor becomes equity holder. The equity holder gets wiped, but you still go there and you still eat there. The food is still served, right? Like Pepsi's gone bankrupt 3 times, but you still drink the same Pepsi. And I think it's something there that could have easily happened with FTX, where that happened. I think in our case, it would have been a bit different because it would have been a different kind of a business model. But I think I kind of failed to see that there was still that ongoing thing. And I think that, some of the creditors, they really wanted us to like say, let's find a plan, launch a token, do something, because that's going to be always better than just like walk away. Right. And I think that, we should have had the courage to just like figure it out, come up with a better plan than just walking away.
Like that scenario for you guys and finding a restructure, it makes more sense than like the SBF. Like if they restructured, that's just still such a hurdle. The fact that like, because it would have gotten out that he basically gambled away all client funds. It's like you can restructure, and it's like even if new ownership takes over, it's like that exchange took all our money. Like that's just such a crazy hurdle versus like you guys, liquidity went away, everything tanked way faster than it could have. Someone's buying us up for pennies in the dollar, but that's way different in my opinion than an exchange of like they straight up don't have the money. Like that.
Yeah.
Like I don't know.
I think so. I mean, you're definitely right there. But I think like FTX, it had so many clients. It had like 9 million registered, clients, 1 million. There's a value in that community that wasn't really captured at all.
Sure.
I think that if it had new ownership, there's cases in history. I mean, even Binance, you think about it, is almost an example of this, right? Like Binance is doing well today. It's still got a lot of users. The ownership, the perceived management has changed. And kind of, there's very many cases in capitalism where the management team has changed, and then the product actually is fine, and or the company is fine. So if that had happened here, and then we say, okay, we bring grown-ups in, like I actually don't think they would have left, because they would have, think about even Bitfinex. Bitfinex survives 120,000 Bitcoin hack by giving everyone equity. And that was just like a very, very easy thing to do. Not easy in the sense of like easy at, for them at the time, but looking back, we think of it as obvious. Like obviously they restructured, and then bull market came and everyone made 20x their money, right? That seems obvious today, but it could have also just like said, okay, I don't know what to do now, we close it, or something else, right? So or lawsuits there.
So God, 3 or 4 years, well, much longer. He's gotten into Bitcoin, what, 2013? But really things got real 2019 of a $100 million fund to being the largest. And then in a span of 5 weeks, it's basically all over right after in the aftermath. Like, did you know it was all over? Like, how long did that take to hit you and like settle in?
I think mid-June, late June. Yeah, I think late June, mid-June 2022. I think it was happened so fast, honestly, quite a shock. And I think that afterward we didn't have really the strength, so we just leave it to the lawyers to deal with. Yeah, I mean, like, I would say it's definitely very difficult at the time. I'd say later on you kind of have some perspective and you're like, okay, like we needed more adults in the room. We grew too fast. It's like this, right? Like Kyle and I are both like very optimistic people naturally. We kind of do things in that way. And you kind of need both skill sets in every firm. Like you need guys who are, let's say, more paranoid or more pessimistic, and they look for the fatal flaws in things. And they look for, let's say, holes. I think, as a firm in a bull market, those kind of people will seem not very interesting, right? And we're kind of entering that phase now where everyone's talking about, you got to lower your IQ. If your IQ is too high, you're going to get wrecked in this market, right? They're coming back into that. And that's in a way why, like, I have some people like DM me nowadays and be like, wait, so how do you get into that mood of like lowering your IQ and like just like aping properly, right? Because like for me, I've noticed like my DMs have gone through different phases. Like my DMs go through phases where they get really angry, and then they're like, but what coins are you buying? Like I've had the same person get angry and then ask me what coins.
Are we at that stage right now? They're asking you what coin right now, aren't they?
Yeah. So I think that, like, at the end of the day, everyone comes to crypto to make money, right? Maybe 95%. Obviously, in the earlier days, there were people coming as like cyber anarchists and as like, anarcho-capitalists. But I can say today, 99% are coming to make money, right? Like, people do accidentally become, let's say, hardcore community members if they don't sell a coin in time, and then now they're part of the community. But I think even when they join a community, it's because they think the community will help them make money. So I think that ultimately, in new cycles, people want to find that option. And I mean, people want to learn that. So I think what I realized, like, after coming out of prison is like, I wanted to share more of like my lessons, my wisdom, the hard-earned lessons, right? Like, I don't know if it's enough to get to prevent the same thing happening to other people, but I also think it's something that it's a good story, if nothing else, right? And I also think that like like during 2019, I had heard about the funds that blew up in 2018, and I was just like, why were they so bad? Like, why couldn't they just be better? Like, just keep your Solana. Like, just don't do this and don't do that. And then this cycle, like, seeing the estate sell pudgy penguins very cheap, seeing them do this stuff, I'm like, okay, yeah, it, like, time comes in a full circle, right? Like, history comes in a full circle. And so I think I have a lot more empathy for like, the winners and like the blowups of all crypto, right? And it's kind of a beautiful like birth, death, capitalism, like creation, destruction cycle that crypto does. Essentially, it does what's in traditional markets, but just 10 times faster, right? So in traditional markets, you might have like rise 100 times, probably 100 times is probably more accurate, but the internet itself is 100 times faster, right? So it's something where there's huge brands that you've never heard of from 2016, 17 days, like FBG, so big in 2017, you haven't heard of in like 6 years, right? Like there's so many things like that where, and that's in a way, like, I think part of the decentralizing element from it. Like the mainstream media always focuses on whales, right? But they don't get that like the whales of each year or 2 years, like not that many have managed to, let's say, hold on to the coins, up until the, 5 years, 10 years later. Basically, only the ones who hold their coins in cold storage and never touch it, those guys hold it. But almost everyone else, they may outperform for some time, but then they may vastly underperform sometime, right? Like even some of the big OGs, right? The guys who bought 100,000 Bitcoin in 2012 and 13, they then built Bitcoin businesses, and they have to sell their Bitcoin to fund these businesses. And over a year, and as we all know, very hard to make money in Bitcoin businesses at that time, right? So a lot of those guys, even though they passionately believed and they put all their money in and then to build on it, they would have sold off so many of their Bitcoin just to fund their business. So that's why, like, I think people don't realize this much, but crypto is such a volatile and beautiful process of churn and burn that I think it really rewards the ultra patient, right? It really rewards the guy who's really humble and says, I'm just going to hold my coins. I'm just going to do the simplest thing. At the same time, it also rewards the degen in certain periods, right? It rewards the guy who's like, start of a bull market, captures the trend. So you get the duality, you get that rewarding of the both. And that's capitalism itself is like that as well, right? Like you have the rewarding of both that big degen, but also that very pure holder. And that's, I think, what gets people really, confused into like, what is actually the right play, right? Because some people actually, they start off the cycle being holders. They're like, okay, I'm going to hold my Bitcoin. And then by the end of it, they're aping every altcoin that's going up, right? Which is kind of the worst thing you want to do, because then you don't capture the early upside, but then you buy all the alts at the top. Right. And then, it's just a lot of these kind of things where if you know your personality, you have to like do your trading investing based on your personality.
Before we get into kind of the crazy stuff that's happening right now, and I'll get your take on the meme coins running. I know you hold some meme coins, also what you're building right now and the ETF trade. I'm just fascinated by Prison. I don't know why. I always have been. I don't know if that's like it just tickles my tism or something. It's like I've just watched Prison. Not enough that I want to go ever. Like I pray that I never end up in prison.
Prison Break you've watched?
Yeah, like I've watched everything, and I've thought about it deeply. It's just like we're like the only animal on Earth. It's like we're the most advanced species, yet we have such a giant percentage that we of like people that are trapped inside of a thing for the rest of their life. It's like what was you going through that, and now SBF going through that, and several other crypto people, like what was when you knew you were about to go in, like was it terrifying? Is prison the same in Singapore as it is in the US? Is it like going into a death box, or like what was that experience like going in and before you went in?
Yeah, I mean, I didn't have any advance warning because they kind of just like served me the papers on the spot.
Oh, in the airport, right?
In the airport, yeah. But it was good in a way because I think you don't have to like dread going. Like you kind of just go straight into it. Like I didn't actually know how long it was until when I got to prison.
So you went from the airport to like a jail, and then from there you're in for the rest of the sentence.
Yeah, exactly. So it was actually really nice. It's almost like when you like just like cold start, you just straight go into the cold shower. So we didn't have that period of like dread or like preparing for it. It was just like boom, you're just in prison. And then the first 7 days they put you in quarantine. You're still in cells with other people, but it's like you can't go outside. So there's no time outside the cell for the first 7 days, and that's like the COVID procedure, which they still do at that time. I think that they've stopped it now, I've heard. But yeah, I would say there's no real fear because it's very safe and very clean. It's more just like, okay, now how do you fill the time?
How fast is like the idea of, okay, I'm here, how do I fill my time, versus the internal, like, what the hell is going on? Like, does it happen pretty quick?
It happens reasonably quick because I think after a few days, like I met with my lawyer and it's like, yeah, here's the plan. It's like, oh, okay, that's reasonable. And then like, I guess I had a bit of fascination with prison before too, because we like I've read a lot about politics and stuff. So I've known a lot of like prison stories and stuff like that, and I just felt like it's a side of life that is it's not always seen, but
so secret.
It's part of the human experience. It's part of the human experience, right? I think actually it's something where people would benefit from something similar to it, maybe less harsh, but something similar to it, especially in modern life. But anyway, like I would say like a weekend, but then they move you from quarantine to your actual like cell with your cellmates that you're going to be with for a longer period of time. And then it's like awesome because then it's like you have your routine, you get your books, you got your like you got your yard time, you got your TV time.
Internet? No internet.
So then it becomes definitely no internet, but you get a tablet and they give you you can add 5 contacts and they can send you emails every day. So you can read their emails, and then you can send out 4 per month. But then when there's holidays, you can send out shorter ones for an extra 5. So like let's call it 9 messages out per month on that. And then you do like one. So you can do 2 meetings per month. But you can also do lawyer meetings like as much as you want. So it's pretty okay. Like people were quite jealous of me because like I would have more lawyers meetings because most people there, they're already sentenced and they're already just like over, so like they're just like serving. And then normally when you have the lawyer meeting, it's because they're gonna like charge you again. So everyone inside just assumed I'm gonna get charged like another 10 years or something because they're like, why are you always going to lawyer meetings? Like, what's going on? I'm like, no. Yeah, and I'm like, no. It's just like I'm just chatting with him on this stuff, and we're just doing this. And then he's like, okay. So but yeah, like honestly, I made a lot of friends inside. It was like, I actually just recorded a podcast on my podcast, Ox podcast, with my cellmate. Actually, if you have a chance to watch it,
I saw a segment of it. Yeah.
Yeah. So that was the first one with Kyle, but I did one with my actual cellmate.
I saw the most recent one.
You saw that one as well.
Yeah.
Okay, cool. Yeah. So we actually wrote a prison guidebook as well afterward. But I think not sure if we can publish it. But it's honestly, I think it's hardship for sure. It's austerity, but sometimes you think about what comfort is in life. It's good to challenge those questions, right? Like sometimes when you're the most comfortable is when you're the most like upset because you're like, I'm so comfortable, so why am I not happy? But also like, I think having something that's more austere but gives you more time to focus and more time to like be calm with yourself. I think that's like really, really cool.
I wonder if you knowing that there was a deadline to it versus someone like SBF where potentially there is no deadline. I wonder if like that calmness starts to morph into,
I think so.
Eventually, the calmness you can reach a plateau. I'm sure there's ways to keep ascending, but there has to be a point where you're like, I'm now at a point where I'm just always going to be deprived of stimulation.
You would think that. Well, I think it plays some role, but I think, people just really underestimate the adaptability of human consciousness. I think, I know SBF reasonably well. Like I've known him since 2018 in various capacities. I actually think SBF probably likes the stimulation of a new experience. I think, there was the news recently that he's like shilling Solana to his guards, right? Like,
oh my God.
Like I actually think that I don't think he would prefer being inside for sure. But I think that he's very, very resilient in his own way because of his detachment as well. Like I think that for him, first of all, he has something to teach people, right? Because he has this different experience. And people in prison are actually still very similar to people outside. It's just that, they've made mistakes at points in their life. But the desire to learn is actually very, very high. That's what I've noticed as well. And so I think that, if he has a chance to teach people things and maybe learn things from other people, I think he will find that interesting. Like actually your stimulation is honestly is better in prison than outside, because outside you actually you get dopamine overload. So you actually lose sensation in a lot of ways, like just the food you eat. It's like too much sugar, too much stuff, too much. And then, you get your phone, the screen is all programmed to like blast into your mind, and then laptop and internet. So when you're inside, you don't have any of that. You actually find that, just you pick up an apple and you look at it, you're very stimulated by the apple. You're like, I can notice the stuff in my surroundings. I can, you can have conversations with people that are very deep, and you can really hear people's stories and talk about things. I don't know, the human consciousness is very, very powerful. It's very, very adaptable. Our ancestors 2, 3, 4 generations ago, I don't know about yours, but they're like marching a year during wars and stuff. Right.
Yeah, that's true.
And that's not even being punished. That's just life, or they're just starving for a month, or it's really not so bad compared to, let's say, I think the biggest problem with modernity is that there's not enough suffering or perceived suffering. So then you have this construction of mental suffering as a layer on top of the general. Basically, there's a huge evolutionary component, especially for men, toward the impulse to action and to a difficult, challenging experience. And so in the absence of that, there's malaise, in my opinion. Because we're conditioned to go into war and die as well, right? Like we're evolutionarily conditioned that way. So part of the bravery you see on CT of like buying coins and like being long, it's also, in my opinion, it's evolutionary because you're simulating, because you have no wars to fight. So you're fighting the coin wars on the internet, right? Like that's why the keyboard warriors, they lack a true purpose of war. So they have to find that somewhere. So
yeah, it resets you. It brings you back to a baseline. You know who also spoke about it like this was Mike Tyson. I don't know how long he spent in prison, but he's been quoted several times. I love watching Mike Tyson speak, but he's been quoted several times in interviews. And they say, you know, what was that like, man? You came out, you were a monster. You had great fights after that. And he said, that was like the only time I kind of like loved myself. That was the best time of my life. Like he still says that even where he is now. He said that was the best moments of my life, just because he found it brought him to a baseline of getting away from owning tigers and, you know, next fight makes 20 million. I can do this and have another girlfriend.
Exactly. Absolutely. I mean, if you look at, there's a good documentary. I mean, the Will Harris one that we talked about before, but, you know, he did one on Habib about the anatomy of a fighter. Right. And it's like, when these guys are training in Dagestan, like, I mean, they're not in prison, obviously, because they're outside, but it's an austere lifestyle. There's an austerity to it. And that austerity is beautiful. And it's, in a way, it's actually true luxury, right? You know, the descendants of Genghis Khan, there's one guy named Temujin, and he refused to allow the Mongol leaders to sleep in the comfy beds that, you know, of the conquered lands that they had conquered, because he was like saying, if we sleep in these beds for like one generation, we're all screwed, right? And so he made them, you know, still sleep on the saddle or sleep, you know, in their own ways. But it's like there is a true understanding of like, if you lose that, you know, if you lose that toughness, if you lose that, you know, so I think that it's like that kind of thing, like, you know, good men, hard times, that cycle, weak men, like comfort makes you weak, and then hard times make you strong. So one thing I realized too is like COVID was really good for us because you couldn't go anywhere. Like in Singapore, it was not full lockdown, but it was like pretty locked down. So you're just at home all day. Everyone's work from home, and you're just super focused. It's like you have nothing to do except play this internet game, you know. And that, like, our entire growth is really from the Singapore lockdown up until like as soon as they opened up, and then we like started to travel again. Then it's like the end, because it's like you're almost like you're losing that razor autistic focus on the markets 24/7. And once you lose that, like your edge can flip from positive to negative very quickly in trading and in markets. And I think that that's another thing too, where it's like, if you have to always know, like, how good are you thinking that day? Like one thing I later learned from a guy, you know, who had a similar experience in stock markets before. He made a lot of money and then blew up. But he was like saying, you know, what he'll do is like, he'll have a really small account somewhere and just like trade the market with that account. And then if he finds that he's losing, like, or just doesn't have a good feel, he will just like close positions in his main account and be like, I don't know what's going on. Like, let's cool off. And I think that would have been a really interesting exercise to do.
All right. So moving on to today, we have just some of the ridiculousness that's going on in the market. I want to get your take, some of the lessons that you've learned. You tweeted your portfolio the other day. It had some majors, Bitcoin, ETH, Solana. You would expect those. And then you go down the list. You have a little extensive list of meme coins. You got Dog in there. You have Doge, Pepe, Trump, and Mog. Thinking about meme coins right now, something is different about the way we have so many memes worth $1 billion. I saw a tweet that Pepe is now worth more than Celestia, Arbitrum, Say, Sui. Bonk, I think, is worth more than, like, top L1s that people would think of as like, this is the future of tech. This is an exciting development. This could be as big as Ethereum. And you have meme coins. 2 months ago, they're worth a couple $100 million. Now they're worth billions. What do you take from that? Like, is this a total paradigm shift of how people are treating alts? And like, what can you take from that and extrapolate into the cycle?
Yeah, I mean, I think there's two types of people in crypto, right? Like those who think meme coins will eventually die out because the space is getting more efficient, the grownups are coming. And that's a view I don't agree with. And I think the second view is that they see meme coins as simply, the natural evolution of social finance and of permissionless markets, right? Because if you think about it, like Bitcoin itself, it basically was a very, very good meme, right? It's a very good story. It's the first one. It's got fixed supply. And so the goal of every meme coin is to become such a powerful community that people in it think of it not as a meme, but as self-evident that it's cool and it's great. So I think that Doge last cycle breaking out and being the only coin in history to break its previous all-time high from a full cycle, I think that captures imagination for a lot of retail this cycle, because they know friends that, who they thought were dumber than them, made a lot of money in meme coins. Also, there's a populism to it, right? Which is that I'm not analyzing tech anymore. I don't have to read white papers. I don't have to, stake anything. I don't have to run a validator. I can simply like the meme. And if I feel like I'm early to it, then I can buy it. And so you have that potential for big upside. Plus you have you're more relaxed knowing that no one has more information than you. Like there's no insider information on Shiba Inu, right? Like maybe on some listing, but that's about it. So I think that is extremely attractive to the man on the street. The man on the street does not want to get told. I mean, he does not want to watch podcasts about data availability and like. Well,
not only not want to, you just won't. Like you won't be able to grasp it. Like there's truly a gap.
True, but I also think that this cycle he won't even want to, because I think last cycle, okay, I would say 2017 was a cycle where YouTubers were telling you about smart contracts a lot, and they were reviewing code for you, and they were like doing stuff. There was definitely that. I feel like retail of that cycle genuinely came for the tech a lot too, and they wanted to and that's why you had no meme coins of 2017, because it was not a concept that like a meme could be the reason why the coin has value.
Right. It was how big could this idea be?
Yes, we're all betting on smart contract tech here. We're
total addressable market. This tech is going to be amazing.
Market, yeah. White paper. That's why the white paper. It turns out white paper itself is the meme, but
at its core, yeah.
This cycle, there's no such illusion, and now it's like, okay, what's the next animal, right? Like, is this like people debated? Is the next animal this cycle going to be a cat one? Because these are important questions as crypto becomes very, very big, and you have this kind of mass virality where a coin can go, like Pepe can go from 0 to a few hundred million in a matter of days, really, right? I think it's not either or in terms of like high tech coins versus meme coins. I think meme coins are just here to stay because there's a large set of people that come to have fun in meme coins.
Travis Kling had a really interesting financial nihilism kind of thesis about this cycle on how every previous cycle is kind of played out, where if everything's going to dump 90% anyways, by the time this is all over, it's like, why kid ourselves? Like if the only goal is to just try to run it up in a cycle, it's like, might as well buy bonk. Like if everyone's going to share bonk, it's much more fun to share bonk than to figure out what modular paralyzed EV like.
I think it's not just I think it's not really nihilism per se. It's more like a financialization where people also want to they want to make money, but they also they like the good vibes while making money as well. And so I think that and the coins are just funnier. Like I think there's style points to it. Like I think especially for Zoomers, it's like if you made a bunch of money, if you made more than your salary on a meme coin, like that's just you get style points. You get extra style points if you made it in a meme coin. So it becomes like because the Zoomers are all about like a big fuck you to the system kind of thing, right? Sure. Where, there's all these like TikToks about how like, I can't get my Zoomers to work, like to show up for work, right? Like, I can't get them to turn on their phone. And I think that's a big part of that generational shift where it's like, well, I'm not getting paid enough anyways. So why am I even working? So I think meme coins are especially, I think for older folks, they see it as nihilism, but it's also because of it's a very pent up anti-establishment populism that I think a lot of Gen Z holds, because they're just like, housing is so expensive, like, you know, like these jobs don't pay enough, but wait, you know, inflation is high, and credit card APY is at all-time highs, like even though the stock market is doing well. And so I think that meme coins, especially, like, you know, you can see it as an outgrowth of like GameStop and these kind of things where it's like, we're going to do something all together and people are going to call us stupid, but we're going to win. So like, I think that there's a way, like the act of being called stupid while doing it and then winning anyways is really the allure.
Yeah, it feeds it. It feeds it. Yeah.
So yeah, so in a way, it's almost the opposite of nihilism from that point of view. It's almost like it's like, I don't even care if I lose money on it. Like,
you are believing in something. It's something worth believing in.
It's like the Joker. Yeah, yeah. I remember like my personal trainer in Singapore in 2020, 2021. He was like saying like one day he told me like he went all in on GameStop, and I was like, why does he do that? And then he's like, I just you know, you gotta like you gotta live a little, he said. And then he said something else like, and then he was like down money, and he's like, yeah, it doesn't matter. And it's like, you know, because if you do that with like Nvidia stock, you know, if it goes down, you're like, okay, stop loss, like this is not good. But like if you do it with a meme coin or like they're like, somehow it makes the loss okay. Like they're so that's something that's super interesting.
Yeah.
I don't know if I fully get it 100%, but it's definitely different, right? Like when people lose money on Bitcoin too, like half people are like, I don't care because when I lose on Bitcoin, it's okay, right? It's a bit like there is some belief going on there.
God, it's just so weird. I'm very curious to see how long it sticks through the cycle. If it goes through normal rotations where once meme coins stop running, sure, some L1s in tech will probably start running. I wonder if like it'll keep having these resurgences, or if this is like a start of the bull run thing and maybe an end of the bull run thing. I'm super, super interested in it. But yeah, that's a fun one to watch. What do you think about being such a big part of the L1 trade? What went well there? What went wrong there? How interesting do you find that trade this time around, especially for things like AVAX and Sol, like Sol being stronger, especially in the mind share this cycle, even than it was during like the L1 heyday. Like Solana, I think is much stronger, but like other things like AVAX or like, how would you rank if you were to think about it for this cycle versus the last cycle? Do you think ETH and L2s are like higher probability of winning out, or is like L1s higher probability of like, it's a higher percentage chance that we're just in a multi-chain world and every single cycle we're going to have all these L1s? Like, how would you rank your excitement level now versus last cycle of L1s doing well?
I would say the new L1s, they're generally struggling to get traction. I would say like Sol has kind of pulled ahead of the pack quite a bit, just in terms of wallet usage, just in terms of users, and just in terms of power of the community. I think that for the EVM L1s, it's a lot tougher now that you have very good L2 usage, Arbitrum, Optimism, and so base. I mean, yeah, Optimism forks. Yeah, so I think that so I think that, you know, it's not either or. Like I think the main problem with EVM is that there's just all the games are the same, and it's just meme coins, really, right? So that's if you look at fresh deployments of projects, DeFi projects, there's not that much, and a lot of stuff now you're going toward like, you know, you're going toward just for the stuff that's not going to go on EVM. They either going to do an app chain or they're going to do something on Solana. So I think that the L1 trade is less rotational, I think, than before. Whereas before it's like first you're in this one, and then you're in that one, and then you're in that one. I think this time it's more like for instance, if you rotated out of Sol into another coin at any time, you probably could not have rotated back in at a profit, I think. Maybe for a brief moment you could have done this cycle. Whereas last cycle it was very rotational, where, you know, there was a lot of catch-up plays. Whereas this cycle, if you have done that, you kind of get stuck in the wrong one, and then you end up lagging there. So I think that has been, you know, the market's not willing to do those catch-up plays because I think the fundamental tech progress has been different enough. Whereas the last cycle, there wasn't enough differentiation as the first one. So, you know, it's a bit like how in the first 2017 cycle, you know, EOS, NEO, Tron, they're all going up. and then the next cycle, a lot of them don't go up anymore. I think we'll see. I think we'll see that this cycle. Like I think several of the ones of last cycle will not hit all-time high again this cycle.
And just overall much greater dispersion probably throughout the cycle.
Much greater dispersion throughout the cycle. It can become very dangerous to be caught in the wrong coin. I mean, really the same as last cycle too, just with a different set of coins. And that's why people have to be cautioned so many times by OGs. Like, altcoins, very difficult to break their all-time highs, especially versus Bitcoin, which is impossible, but also very difficult versus dollars.
Yep.
So like Solana, even as good as it is, still may not ever break its all-time high versus Bitcoin. Like as scary as that may sound to people, because by the time Solana is 250, Bitcoin could be 100K, and then you still can't break all-time highs versus Bitcoin. Yeah. Right. And then, so we'll see.
Two other very interesting trades I want to get your take on. First one, this Bitcoin ETF obviously changed the industry in a way. It kind of sped up our cycle, but also now we have this potential ETH ETF. Do you think that is as simple as just a run it back turbo trade? We've seen this playbook. The success of the Bitcoin ETF on every single metric, on the amount of inflows, on how quick they were like a top Bitcoin ETF launch ever. The way it was so successful, does it make the ETH ETF trade a layup? Like, is it that easy?
I think it's a layup. Yeah, I think it's a layup. I think ETH is a very good own going into ETF. Mainly because I think it's not priced in, because I mean, if you just look at for TradFi guys, I still see a lot of them say, Bitcoin is going to be the dominant one now as an ETF, digital gold, ETH is splitting with Solana. But the problem is that the problem with that thesis is that ETH is incredibly deflationary relative to other coins. So that's why ETH can go up versus Bitcoin, even when there's not that much inflow into ETH itself, because it simply requires people not to sell it.
Yep.
Right. Like that's been an effect for some time now. So what's going to happen when there's actual influence into ETH itself? I think there should be a big markup on ETH versus Bitcoin. Not a crazy markup, but I think it can go to 08, 0.75. I think you need to start selling, but I think 0.75 is comfortable. I think that restaking takes even more supply off the table. So barring like a big restaking bug, which would be pretty bad, I think that's a pretty good layup. I think that also the ETF flows will be large for ETH as well, because many people can sell their Bitcoin ETF for ETH ETF. Many people, will, just that alone, if even 10% of people do that, it's going to be an absurd amount of money. I mean, that'd be like a 70,000 Bitcoin to Ether rotation. Right.
I think that the Bitcoin ETF doing well, I think it just it makes it so much easier versus if we kind of waffled around and it was like, Bitcoin's kind of still where it was. All right. So building on that, this is where things kind of get interesting. I was thinking about this the other day. Let's say ETH ETF launches. I don't know if it happens end of this year or later this year or even next year. ETH ETF launches and it's just as successful to a certain degree as the Bitcoin ETF. Why would they stop there? And I was thinking about it in the sense of, if TradFi sees that like there's just always going to be appetite for these things, it becomes a self-fulfilling prophecy. And I think the other thing is, if the ETH ETF launches and passes, the question then becomes, especially with the SEC's track record versus tokens, the question then becomes like, there's a lot of other dinosaur like old altcoins which you can make almost a stronger case they're not a security. Like one that sounds ridiculous, but if you think deeply about it, it's true. Is like Dogecoin, you could probably prove easier as not a security than ETH, right? There's no ICO or all these things. So it becomes like ETH ETF launches out the gates and does super well. Why wouldn't they launch a Dogecoin? Yeah, Litecoin, Dogecoin, like those. I think also, I don't know if I've been struggling. Like, am I getting too bull-hearted about this, or like that seems
so I think the way that it'll
realistic.
I think all those ETFs will get approved actually, because I think the SEC won't want to fight fights that it can't win anyways, and it doesn't.
That's what I mean. They've already lost this. They've basically already lost.
They've already lost it. They've already lost it. So they don't want to. No one likes to fight battles they can't win, right? So I think that what's going to happen is that a lot of stuff's going to get approved, and then eventually, like the pump effects will dissipate, right? Because I think that if you launch an ETF on like every single coin, people might not buy it. There's plenty of ETFs, for instance, that no one buys, right? If you go down, if you look at ETFs, there's many ETFs on sectors that have like no AUM.
Yeah.
Because I started my career in ETF arbitrage. Like I saw some ETFs get huge traction, right? And I saw other ones like that were really hyped get no traction. And actually, the seeding of these is a bit like ICOs too, because they have to go to the market makers and say, please buy 5 million of my ETF and just like hedge it, and that way it's on the books. There's some AUM, and the market maker's like, okay, fine, like I'll do it, but you gotta like give me something back. And then people were seeding these like bond ETFs back then, these Asia bond ETFs. No one bought these, but then bond ETFs in the US are huge. And so you never know what takes off in the ETF space itself even.
Yeah.
But here, I think it's going to be similar where I think there's going to be some shenanigans for sure, right? Because
I don't know how we don't get that. It's not even really a question. Yeah. It's not even a question of like, what's their appetite for? I think the first couple will just be, what's the easiest one to make a case not a security? And it's like some of these like Dogecoin, Litecoin, like there'd be more appetite for a Solana ETF out the gates right behind ETH. But I think it'd be much harder to get the Solana ETF. Like you could probably see a Doge ETF or a Litecoin ETF before a Solana ETF, which is ridiculous.
I mean, you could see a Michael Saylor of Doge already, right? You could, I mean, Elon kind of is, but you can see like Doge on the balance sheet. You could have a trust that owns Doge, and then it just keeps buying as the shares go to premium. I mean, that's so the extreme. Yeah. I mean, so eventually the market may be like, okay, what if I don't care? Like you can do whatever it's still just a mechanism. So I think right now we're in the Goldilocks period of like market access, which is like, now that we have access to this liquidity, we can do all these things. Eventually it'll get to the point where it's priced more efficiently. But I think the first coins to get ETFs, they get that rotational effect, they get that diversification effect. It's like SPACs, right? SPACs used to do really well, and then everyone did a SPAC, and then they didn't do very well. Or it's the same with like, listing cannabis stocks. For the first two do really well, and then the 10th one, doesn't do as well. So yeah, I don't think it would be as crazy as I don't think it'll be that crazy. I think where the shenanigans can come in though is, if coins have already been cornered and then they get ETFs listed, and then that can create a lot of like recursive, like reflexive buying, because there's just so little supply of spot coins, right? That could happen on some coins like BCH or like Litecoin, where it's like stalled out for so long and no one knows who owns it anymore. Like that's what you could see happen. But it's hard to say because these memes also aren't that strong anymore. At the same time, if they go up, people will come up with a narrative for why it's going up. So,
Litecoin was 400 when Bitcoin was 20K. It's like Bitcoin's 100K, Litecoin should be 16. Like you could start coming up with these relative valuations.
It's catching up. Yeah, exactly. And it's like, okay. Yeah, exactly.
Last thing, actually, you're building out a new project. Your time in crypto isn't done. You're running it back in a sense with Ox Exchange. Like what's happening there? What are you building?
It's basically like a CDFI perp exchange. So you can trade 40, 50 different pairs. Right now, the collateral is all in Ox. All the P&L margin is in Ox. So we've got 7,000 or so on-chain holders, and then we have about 1,000 or so trading on the exchange. And the next step is we'll allow, let's say, multi-collat as well, so you can trade with Tether or ETH. But the basic idea is that the entire platform is powered by the exchange token. So when you make money, you make the exchange token. When you lose money, you lose the exchange token. It's a model that hasn't been tried for 4 years now. Some people tried it in 2019. But I think the cool thing about it is that it creates just like a natural base effect for the token where as people lose money on it, they have to rebuy Ox to redeposit. Also, because it's traded with Ox, you don't have to worry about solvency because exchange always has enough Ox to pay out, right? Because exchange, the treasury is paying out that Ox to winners, or the market makers that trade on there, they will pay out the winners. So it's kind of a system where I think it should be hyper resilient to market structure changes or to big kind of market activity, and then from there, we have a few key concepts. I mean, one is that like, so we just launched copy trading vaults, so you can kind of copy trade your friends and so on and so forth. And then Kyle and I will run some vaults, and we'll have this weekly battle where we talk about views on markets, and we'll share some positioning ideas. And it's a bit like your SocialFi concept, where I realized that, you know, Hyperliquid has vaults, but they don't really work because when people put it in your vault and then you lose money, you feel really bad. You know, like in 2018, people ran these BitMEX groups, and then everyone blew up, and then they had to like, you know, and then people have to find them and stuff.
Delete
right?
the Twitter,
Yeah, exactly. So what I realized from all those experiences is that like people still love to know what other people's positions are, but it needs to be like toned down. It needs to be like social. It needs to be fun. So that's also what I'm kind of trying to promote here. And it's overall like, you know, in the BitMEX days, the meta was supposed to be you keep 95% of your Bitcoin in cold storage, and you trade with 5% of it. You hedge, you punt, you do whatever you want. And I feel like FTX brought in the meta of like portfolio margin. You put all the coins you own on FTX, and then you all this margin and so on. I think that's actually the wrong direction. I think the right direction for this space is to treat perps as kind of like a game, kind of like a fun thing. And you know, because then like a lot of things in crypto, they're much better in moderation, I feel. So I think that, you know, with this, you know, when you lose money on the exchange too, we give you a second token called Milk that you mine essentially with losses, a bit like a point system. And so you're getting in the future a lot of rake back when you lose, basically. And so like basically I'm trying to create like a very gentle community style trading experience where it's like, you know, people have experienced the kind of the Bybit style, like, you know, you get liquidated every month and then, you know, you redeposit and that kind of stuff. And I think people already get that if you do that over 5 years, you still have no money after 5 years. I'm trying to create something where, you know, given you do like to trade perps, you know, and let's say you're not a winning trader, but you like to do it. Well, here's a way you can do it. You can do it more socially. You can also do it more, you can kind of get more out of it. And by the end of it, you may own a piece of the house. So you actually can net win from it. It's like if you own BNB by having lost money on it in the early days, you know, that's something that, you know, and if it's so liquid that you can't even sell it, like you can't be forced to sell it, then, you know, you're almost forced to benefit from the growth of the platform. So I'm trying to create some kind of new social trading experiment.
Yep.
Just try stuff no one else tries. Because I think that for me, it's like, you know, I saw so many people just come out and buy this coin on chain. And I was actually really shocked because I didn't realize that people would do that. And then I was like, okay, then I in a way I have a commitment to these people to find something cool to all do together. And then, you know, with OpenX, I think the realization there was that people will buy AUX on Ethereum, but they're not gonna deposit Tether to the exchange because that is like, okay, it's an asymmetric risk if they buy AUX because they're like, well, it can go up 10x and the max I can lose is what I put in. But if I deposit Tether into an exchange, like, you know, maybe I can't, you know, I can't get the money out one day. And so that
you're locked in. Yeah, you're locked in.
You're locked in, and it's not asymmetric because you're still denominated in Tether, right?
Yeah, I see.
So I'm almost trying to do something where, and also the liquidity mining and the mission. So we have a mission rewards on the platform where you get paid yield for completing trading missions, like a certain volume or OI and these kind of things. And, you know, the idea there is that, but you can only get it if you own AUX already, right? So you can't farm it if you come in from the outside. You know, it's not like DYDX in the early days where you can farm it by just trading and then dumping the rewards. You actually have to own AUX to be able to farm AUX. So I think longer term, the way I see it growing is like, it's a bit like a mix of Olympus style, you know, community owned liquidity, community owned protocol, and a kind of like a meme coin style social experiment, right? Because one of the things about AUX too is like it benefits a lot from attention. So like I realized while I was in prison, like people were pumping and selling this coin like 3x, 4x. They're like trying to play the release date, like when is he gonna get released, and they buy it. So and it was good, and it was a lot of volume too. And so I think it's a really fun coin. I think I mean, the community is great.
The release date pump, that's absolutely absurd. It's so ridiculous. Yeah, it's what I think is cool in your explanation there is a way you've blended in. I don't even know if you probably did do this intentionally, but a way to blend in almost one of the lessons you learned of, yeah, during cycles, it makes sense to be the guy and to be tacking on more risk, but also being able to balance it or maybe having a co-founder or something that's cynical and is much more focused about just surviving for 4 cycles. And by being able to points farm on the side of your active trading, it's like you accomplish 2 with 1. Is that the first? Is it the first exchange to ever have like a point? I guess it's not points because you're earning milk, but it's the first loss farming in a way. Is that the first one?
I think so. I think some of the points formulas for Hyperliquid and the other ones
Are similar?
probably give you more points if you do that. But here it's just explicit. Here it's quite explicit, and yeah. I mean, I think that these models are going to be needed. If you think about perps themselves, they kind of haven't evolved for 6 years now, right? Like you had BitMEX with the first real perps product, and then you kind of just all have the same thing. It's all like, when you get liquidated, you lose all your money, right? And it's a very good revenue generator in the beginning days for the exchange, but eventually all the exchanges go through a period where eventually they burn through their client base and then they're gone, right? Like, for BitMEX, that happened with March 2020, where 90% plus of open interest got liquidated. And after that, there's just no clients left. I think, that the only reason why it hasn't happened to Binance is because they have such a good spot offering as well, and they have generally better, I think, trader education and vibes. So people are not, let's say, doing that as much. But I think that the churning of traders and the requirement to get new customers, that customer acquisition cost is really high. And so that's why, for a lot of the perp exchanges last cycle, the affiliate, I think the main innovation of Bybit was to take the ideas from retail FX and bring them into crypto, which is to say, I'm going to pay affiliate fees.
Very well. Yeah.
Yeah. He says, I'm going to come in, I'm going to pay 80% affiliate or something really, really high. And we're going to run B-book for everything. B-book meaning, internalization of client flow, right? And they try to attract, very, very uncorrelated flows if possible. And that model, again, is a good model, but it's a certain type of model. I think a crypto native model where the token is community owned liquidity, but also like simple. Like I think GMX actually goes in a really strong direction. I think that's probably one of my biggest inspirations from what I've seen grow, because I think there's an example of community owned liquidity. I think I'm trying to make a simpler version of it by not requiring GLP and this kind of stuff.
Right. That's a cool concept, man. I'm glad you're building that. I want to ask you if you have any closing thoughts from someone who ran it all the way up, who learned some valuable lessons from. I think that us going through this today is going to help a ton of people that are in a similar boat. Maybe they're not going to make, I'm sure they think they're going to make $1 billion. Maybe they won't. But if you have any thoughts or closing ideas that, or even things, maybe if you don't want to give advice to someone, but like things you're repeating kind of for yourself this cycle.
Yeah, I think really being in tune with your emotions, try to be self-aware, stay humble, also always stay hungry and learn. Some of your best ideas can be when you least expect it. And I think also just be very, very cognizant of when there's alpha on the table, you make sure you pick it up, because sometimes the difference between having a very good cycle and just the mediocre one or even a bad one is, you're in the zone, you're in the moment, and you capture that opportunity when it comes, right? Whether it's farming very, very early a protocol, or whether it's a meme coin in its early days, or whatever it may be. So
always a pleasure, man. Yeah,
thanks, Luke.
We'll chat soon.